Hey everybody, welcome to Trading Capital's daily live stream. Today is currently February 25th. It is Sunday, February 25th. So we're doing this stream slightly ahead of the opening of tomorrow's new trading week. So we're going to be discussing in this video just summary of what transpired Friday in the tech space and the overall S&P 500 and what is likely going to continue throughout the rest of the week. And then we're actually going to also look through some of the insider buying and selling that has been occurring over the last week. So I am going to jump into the NASDAQ chart, the QQQ chart. So definitely try to open this up and go through. It's always a nice teachable learning moment if you can go through. But we're going to start with the QQQ chart here. We're on the 10-minute chart. So discussing the 10-minute chart of the QQQ, first things first is the Q's actually made a brand new high, an all-time high on Friday, and then sold off pretty sharply, bounced, but created this beautiful symmetrical right shoulder, which we actually just triggered a bearish breakdown of this right shoulder. So what does that mean? Well, that means there's a downside target of 431. These are just short-term time frames, so things can change based off of how we open tomorrow. But as of now, it is looking like the Qs, especially when you look at the futures, the NASDAQ NQ is down 0.23%, 40 bips shaving off the price. And then you have some weakness in crypto, strength in nat gas, weakness in oil, weakness in the S&P 500. So as of now, the futures are showing some signs of weakness, and that could be because tech closed pretty weak on Friday. The S&P almost closed at the lows, and you've triggered this bearish pattern. So there's a few levels I'm watching on the Qs intraday. First off, these two pivot highs. Notice how here was your big bearish breakdown gap, which you actually managed to have a bigger breakdown, make new lows, and then you had a bullish gap that almost gapped you above this zone. So you did fill this bearish gap and you proceeded to make new highs, which is a positive. But the fact that you could not close the week positive is a little bit of a concerning sign for this tech heavy space, especially when you factor in every mega cap on Friday was red on the session, except for who? NVIDIA. NVIDIA sold off. It was up over 4% on Friday and then sold off from the highs. So definitely watching for NVIDIA here. NVIDIA is showing a big distribution pattern, likely means sellers have exhausted the upside in the near term. Not saying it can't go higher over the next several months or weeks, but as of now, NVIDIA is looking a little bit exhaustive to the upside. When you factor in that NVIDIA sold off from a high here all the way at 823, closing below 800, that's a little bit of a psychological breakdown of that whole 800 number, in my opinion. You look at SMCI, big gap down, AMD, AVGO. So a lot of weakness was showing display in the semiconductor. So I think that opens us up for a pairs trade where you look for a short on the tech space, specifically around XLK and semiconductor stocks. And then you could be looking for some long trades in some of the other breakout sectors, i.e. like XLP, staples, like industrials have been strong. I wouldn't chase that, but a lot of other sectors are showing signs of potentially reversing and seeing some capital flow into them, versus the tech space is showing signs of potential distribution at these levels. All right, so first things first, we have discussed the NASDAQ. Let's just look at the SPX chart, daily chart, trading into the top of this wedge pattern. You can see you reversed off of the highs, still above that 5,000 number. That is a bullish sign. The fact that you were below it and you had a bullish gap up above it shows you great deal of strength in the S&P. This is a very tight upsloping wedge pattern. Anybody that doesn't know technical analysis, upsloping wedge patterns have a strong tendency of breaking down. They are actually a bearish pattern. Now, this type of pattern can keep trading in this tight range for quite a long time, which surprised people. You can see we almost had a breakdown here and they saved it. So it can keep chopping in this tight range, but eventually it is going to have a bigger breakdown, and odds point to a move lower. All right, so enough about the markets. Let's discuss. Good evening, Ram. Thanks for tuning in. You can put some questions in this video. I'm going to be discussing some of the insider trading. So we're actually going to go through some things here just to see if there's any potential signals in the market that are telling us based off of insider selling whether to go long or short. So Had some selling in AbbVie. What I look for is a difference in, I like to look at the shares held after the transaction and basically the amount of shares that were bought or sold. So that is the big difference. For instance, this person still holds 243,000 shares. They sold 52,000. It's a decent dispersion of shares, but it's still they're still holding quite a big amount of shares after the transactions. AFL, the director, has sold 3,000 shares, holding another 5,500. So they've almost sold about a third of their shares in one fell swoop, which is kind of a little concerning as the director, but maybe it's just a small profit taking. Let's look at the AFL chart, Affleck chart, because let's see if there's any sort of a trade setup that is kind of confirming with this insider sell. So you had that big bearish gap down on earnings. Affleck is a powerhouse stock, notoriously likes to get bid up. I would look to see Affleck retracing to this upsloping trend. You can see these two trend lines. I think Affleck will retrace into this 74-75 zone. Maybe it aligns with this pivot zone over here. You can see you have a whole host of support. So I'm still looking for a potential move down. Maybe that's why the director is also selling here. Again, you are starting to get above into this gap window. So there's always a shot they can push this name right back up to the all-time highs, because it is one that likes to catch a bit off of the lows. But I would still favor a little bit lower price action in the coming sessions. So that one could be a potential on watch based off of some insider selling as well, and the technical setup. Really no difference there. ADC, Air Lease, that's nothing too important. Amazon, there's quite a bit of selling in Amazon from 4 different people: the CFO, the SVP, the CEO, and the VP. So a lot of different people selling, a couple million, 1.8, 3.75, 23. So a decent amount of selling, but in the grand scheme of things, it doesn't really affect their shares that much, other than the CFO selling, roughly a third of his shares. Brian T. Olsovsky, the CFO, selling 16,800 shares, still holding 49,000 shares, but definitely a lot of sell side pressure in Amazon. Let's just quickly take a peek at the AMZN chart. I'm going to remove these drawings. Amazon into a big double top. Volume is increasing at this zone, so you're either going to have a big breakout or a bullet or a bearish reversal. Amazon has just been climbing much, much higher, really dragging the whole XLY ETF up. First things first, if we look at Amazon, we can see that we're running into this little resistance zone over here. So that is a little bit of a resistance zone for Amazon, connecting your previous pivot, bounce, big chop zone and bigger breakdown zone. And now you're retesting that zone. So it does look like Amazon wants to try to push for new highs, but it's super extended. Maybe Amazon can get up above this zone, but again, the weekly RSI trading into the very extreme overbought zones. You could be starting to put in your first bearish divergence on the weekly RSI. Actually, you do have a monster bearish divergence here, being the fact that you have made these lower highs on the RSI. High, lower high, potentially a lower high, but you're making your high, higher high, and now a lower high. So watching weakness here, I'm looking for Amazon to actually retrace and sell off. I could see it retesting this 156 range and even this previous little neckline. So maybe we see a scenario where Tesla catches some of the sell side pressure that Amazon is about to experience, and maybe Tesla rallies and Amazon starts to sell off. But clearly this inverse head and shoulders has broken out, but we've really had no sort of a pullback other than here over the last 1, 2, 3, 4, 5, 6, 7 weeks of price action. And when you start seeing insiders dumping, from a variety of different names, that's a little slightly concerning. All right, let's continue to go through here. American Well, 3.1, 200, nope, nothing crazy there. Shares look okay. Appian, 5.8, nothing crazy there. 206,000, sold 82.41, nothing crazy. So no unusual amounts. This one might be unusual. BCPC, Balchem, I'm not really familiar with it, but here you have the senior vice president selling 11,100 shares, still holding 6,700. So they sold the majority of their shares. Let's pull up this chart. First things first, we want to look to do a volume check. This one is actually trades only 109,000. So I don't even like talking about stocks like that because the volume is so light that this could have rather big outsized moves in both directions. As of now, on a technical basis, it is looking like it wants to continue higher based off of this breakout above this pivot. Impulse green candle breakout. This one looks like it wants to trend higher and retest this previous all-time high at 174 and maybe even squeeze more. I mean, this is a fairly large consolidation range that it was chopping in, and you've actually broken out. So I think any sort of retest into here could be bought, but this one's a low volume name. I really don't like to play it, so we're going to move along. All right, let's continue to look through, but a lot of selling in that name. Banff sold 7,300. I will move along. I'm not familiar with that ticker. BlackRock selling 36,000. So the director, Rachel Lord. This is an unusual sell. So this is a large sell, 29 million, 29.5 million. Shares held. So Rachel holds 17,000 shares held after the transaction. She sold 36,000. So again, she sold the majority of her position in BlackRock. Maybe she knows something. Maybe she's expecting some sort of weakness to occur. I mean, as of now, you got a nasty little daily reversal candle there as it attempted a breakout of this flag pattern. Weekly chart still extremely bullish at this point in time, but it leads you to think if she's selling here when we've had meaningful consolidation to move higher, maybe this flag pattern has a breakdown that catches people off guard. So it's interesting to see that she's selling. I'm just trying to see if there's any other resistance points. You know, I could still see BlackRock based off of this channel. You can see this channel, high pivot before your COVID sell-off, COVID crash low through this intersection breakout zone, a little bit of a breakdown zone, pivot. I could see us pushing to about 880 on the charts for BlackRock. That would not shock me based off of this pattern. Obviously, BlackRock's heavily exposed to the overall market and financials, so you have to expect that financials have to remain firm in order for BlackRock to continue higher here. BA analysis there, Ram. I'll discuss BA for sure. Let's discuss BA. So Boeing, let me just remove all of these lines, clean it up. Let's throw in some other moving averages here. We'll throw in the 200. We'll throw in the 50. And that should suffice. So right away, weekly chart of Boeing, we're sitting at that weekly 200 MA. So that's why I turned that on. The weekly 200 MA has had a sharp descent, and now it's starting to round and flatten out. Whenever you get this rounding and flattening out of a long-term moving average, it is showing signs of heavy accumulation. Buyers are now stepping up. They're stopping the downtrend. They're happy with the valuation. They're happy with the price of Boeing at these levels. Not saying it can't go lower, but this steepening and this slowing down of this fall is showing buyers are propping the price action up and accumulating in this range. Typically, when you get a weekly 200 MA in a downtrend and then it starts to curl up in an uptrend, you could get a lot of momentum to the upside. So definitely keep Boeing on watch. Obviously, Boeing had that stellar multi-week push up and then got heavily rejected off of that airplane. What was it? The hole in the airplane, and then wings falling off and so on and so forth. So they've just been hit with a massive amount of negative publicity. I would like to see Boeing still fill this technical gap on the daily chart. It came very, very close to doing so. Some would say it did, but I still think that we have maybe one more dip in Boeing before the bigger move up. If we look at that weekly chart again, the level that I would like to see Boeing at, let's just see, is basically right at this trend line. I think we need to tag this trend line or even pierce it to almost shake people out and get them fearful. But I do think Boeing at these levels is certainly interesting around the 195, 190 area. Now, if for some reason Boeing breaks through this upsloping trend line, say we get a weekly close below that, then it opens up the probabilities of a potential move, believe it or not, all the way back down to this 140 zone, which would be an absolute buy in my opinion. It's not my base case. I don't have all the answers yet. I would need to see the breakdown occur below this upsloping trend line. But again, we get that weekly close below, it opens up the probabilities to a move down to this next support range. So I'm watching it closely. It is one of those bellwether names in the industrial complex that typically does extremely well. Once it catches a momentum bid, that's the time to hop on because this thing does have legs to run higher. The nice thing about Boeing on the daily chart here, you got a little bit of a doji candle on volume. So this is a little bit of an influx of volume when the market was actually seeing light volume and a sell-off. So it's a short-term positive. It still closed negative on the session, but it did finish off of the lows after making a brand new low from this bearish consolidation range. Now, this could also be shaping up to make a bear flag. So Boeing has to defend this price action fairly soon, or else it runs the risk of really starting to trigger this potential bear flag breakdown, which based off of this Fibonacci extension move could take you down to 149 on the charts. And with overshoot, I think that's why we look at this support trend line. So hopefully that Boeing analysis helped there. I started following your religiously, smile face, question of a few stocks in SMCI, average cost 982. Currently in loss without stop loss. Any recommendation? Sorry, so I have a few stocks of SMCI. Are you long or short, Ram? What are you, long or short? Let's pull up SMCI. I'm just waiting for your answer, Ram, and then I'll discuss this. You're long. So you're long at 982. Yeah, so that's concerning. I'm just going to mark. So you're long around this, around up here, around these high pivot reversals. So that's kind of concerning. Reason being is look how extended you still are on the weekly chart. RSI is still trading into the weekly 90 zone. That's exceptionally overbought on the weekly time frame. Daily RSI had a big dip. You got that big monster bounce. And then as of Friday, you saw that nasty, nasty down candle. So what does that mean? I mean, technically speaking, you're still inside of this bullish gap up bar. This could be construed as all inside bar consolidation. You could move higher. Now, I remain a little bit skeptical because despite you're inside of this bullish gap up, you're inside of this heavy red bar reversal. So I'm leaning slightly more bearish on semiconductors, especially when you look at how the QQQ closed on Friday. The QQQ actually triggered a little bit of a bearish breakdown. You look at the SOX, the semiconductors, SOXX ETF, semiconductor ETF, also closed down 1% on the session and pretty much making a new high on the trend and then almost engulfing the previous candle on Friday. So semiconductors are a little concerning here. They've had a massive, massive move to the high side. I think taking profits is prudent. Even potentially trimming a position if it's gone too big is wise. But I think that semis are more likely to enter a little bit of a downtrend. This was the up cycle. It lasted around 105 days, basically 71 bars of price action all the way back here in October in the semis. We've had a stellar move in semis from this 432 all the way to a high of 649. We've just entered a new cycle here. Basically off of this daily reversal candle, had another bearish gap down, lower high, another sell-off, and then a big gap up, an epic one last hoorah attempt at breaking out in my opinion, and you got rejected. So I see semiconductors under pressure in the coming weeks and months. I think that this next cycle in semis is going to be a very choppy and distributive one that likely trends lower. It will last likely to about the end of May. I think we could see weakness and choppy lower price action in the semis all the way up until the end of May. That's what I have it mapped out and priced out. So names like AMD, AVGO, NVIDIA, even if you look at NVIDIA on the daily chart, obviously the earnings were positive, continuing to show momentum. But on Friday, it closed, it pushed all the way up to 825 and had an epic intraday reversal. I mean, this type of sell side pressure, okay, well, this is a little bit of an educational moment. 10-minute chart intraday. We hit a massive gap up, huge high pivot all the way around that 825 zone, 824. And then look at this tight range. That's an algorithmic fund just unloading massive amounts of shares into the strength. So this is telling me this type of sell-off and consolidation is a planned sell. It means that a huge fund is now trimming, taking profits, and likely means this could be the high pivot in NVIDIA for at least a couple weeks. Maybe you get a retrace and push up 50%, but the fact that the majority of the semiconductors on Friday were weak and NVIDIA was the last mega cap holding firm should be slightly concerning to your SMCI position. I bought SOX too, might help if get a tech in reversal. You bought SOX? So, I mean, full disclosure, I'm actually shorting the semis, but you bought SOXX. What's your average on SOXX? You know, be careful of this daily bearish divergence. The fact that you're putting in higher highs, lower highs on the RSI, weekly RSI still entering that overbought territory. I still think there's a very solid chance of retesting at least 584 and likely even this previous all-time high pivot on the SOX. Now, I could be wrong. It could just continue. But when you factor in how much liquidity NVIDIA and the semiconductors have been adding in recent sessions, it's just showing a signs of potentially a little bit frothy is the right word to use in this situation. NVIDIA and some of the semiconductors are just showing signs of excessive froth. Not saying they can't continue high over the long term, but in the coming weeks, I think especially when you factor in the rate cut expectations moving from 7 cuts at the start of January to now about 4 cuts. So that's a big difference. You bought SOX, SOXS. Yeah, that's a great hedge. That's a really good hedge. We are also picked up more SOX. I have a couple day trades. I have a big swing trading position, but 406, that's a nice average on SOX. This one I believe could come all the way up to 629 at the minimum. You know, you're putting in this huge falling wedge pattern on SOX. Maybe you can come down a little bit more, but this wedge pattern is getting extremely tight. You had a little bit of a breakout here, got rejected, and now you could be coming up to retest the breakout. So I'm watching this sector and this ETF very closely myself, and I have a lot of shares accumulated in a swing position. All right, let's just quickly run through some of these other stocks like Microsoft, Apple. Apple sitting below the daily 200, also on watch for this upsloping trend line. You break this upsloping trend line on Apple and it could see a sell down to 160, 180. Just want to keep scrolling through some of these insider buying and sellings. If anyone else has any tickers that they want me to look at, feel free to put them in the chat box and I'll do my best to provide some analysis. But I just want to keep scrolling through. So we had that BlackRock big sell. Take note of Rachel Lord, BlackRock selling a decent amount of her shares. Square, some selling in Square, but really not meaningful. CSV, nothing out of the ordinary there. CRL, let's continue. Net, so Cloudflare, these are pretty big sells. So the CEO, Matthew Prince, look at this, cashing out majority of the shares. So Matthew sold 52,384 shares, and he still holds only 12,183. There were two actual big bulk orders, two orders of 52,000 shares, one on the 21st, one on the 23rd. So two massive sell side pressure from the CEO himself, unloading the majority of his shares in net. Let's look at that. Let's see if there's any technical setups. So the sell side pressure is bearish. Is the chart bearish or bullish? Obviously, net had that big technical weekly breakout. You've had a massive sell-off on the daily chart, hitting your first support channel and holding. You know, the daily chart looks nasty, but the weekly chart looks okay. It still needs to consolidate this impulse candle breakout, but if you hold this channel, this one could move up. Interesting to see that there's been so much selling. Maybe it's just because we had this big impulse move and they started to take profits. But they've started selling in this range around the 21st, 23rd, the CEO. So right down at the low here, 21st, and then also pretty much at the high on the 23rd. So pay attention to net. You know, the CEO selling is slightly bearish, but it may be nothing. But the technical picture of the chart is actually diverging from what the CEO is doing. This is looking like a weekly breakout that wants to trend higher. Patterns can always fail, so we have to take it with a grain of salt. But this one is a little bit of an interesting conundrum when you have the CEO selling, but the chart actually looks like it wants to trend higher. All right, CBU, nothing crazy there. Confluent, lots of selling from different individuals in CFLT, Confluent, but the sells are really small, just taking profits, so we're not going to look at that chart. A couple other sells, nothing crazy there. 1 million shares in CRCT, still holding 5.2, that's okay. No unusual sells. DaVita, DVA, COO, selling 29,000 shares, holding 37,000. So that's a big chunk. That's a big chunk in comparison to what Michael's still holding. So let's pull up the DVA chart, DaVita. I know that one's one that we can trade. It has enough volume. It has a fundamental backstop by Warren Buffett and Berkshire Hathaway at the same time. So this one's had a stellar breakout. This one looks like it's going to charge higher and make new all-time highs. The fact that the COO is selling, maybe just taking profits at these highs because the position has gotten a little bit bloated. We obviously don't know, haven't figured out where his dollar cost average is, but it could be much lower. And obviously every single move higher off of a lower cost basis adds a pretty big increase in the position size. Looking at the daily chart, this one still looks technically bullish. You know, you look at this rather large consolidation pattern here, here, and here. You broke out of your neckline. And I do see a couple more comments. I will address those momentarily. But that's a nice technical daily chart breakout on DaVita. This one actually looks like a technical long setup once we get a little bit more consolidation. But this one could have a move all the way up to about 149.40, 150. So call it 150 target on DVA. Wow. That would be a pretty big move. Keep this one on watch for alongside, guys. All right, let's see what else we have. John C, 7587, thank you for coming to the stream. And Sumit Kaul. All right, Roku seems to have found support at 62.50. Is it reasonable to expect an upside retrace after its recent drop? So Roku had that big bearish gap down, if I recall. Yes, it did. I've actually traded this one in the live stream. So just bear with me here. Just clean up this chart. Just want to turn off some of these moving averages. We'll keep the daily 200 on. All right, so Roku, massive bearish gap down on earnings. This was on the back of everyone expecting bullish results in a lot of these streaming companies, with Meta doing well. You had Netflix do well, a couple others do really well, and then Roku just diverging from the trend, absolutely collapsing to the downside from this high pivot. What is this type of sell-off here? I just want to measure this sell-off. So a move down from 94.47 all the way down to a low of 62.80. It's now trading at 64.48. It's roughly a 31% drop from this gap down. Now Roku is getting oversold. It's oversold on the daily, no question about that. Weekly RSI still suggests a little bit more downside. However, as you can see, we are hitting pivot low, pivot low, pivot low. There is a whole host of support on this channel. I would anticipate, at the very minimum, I would anticipate a bounce in Roku. Obviously, it has to firm up with the market. Stocks that gap down on earnings have a tendency to trade with the market. If the market is strong, they're strong, they're going to push much higher. If the market's weak, and if they're already weak, which Roku is, then it's going to trend lower and not really catch a bid. But I would anticipate Roku retrace back to the 69 zone, 69.26. And then if it can get a daily close and consolidation above that, you could retrace back to this downsloping trend line, pivot high to pivot high, through this breakout zone, through this support zone bounce. That's where you could. But the thing about this pattern is, look at this bullish pattern that it was forming, almost this inverse head and shoulders on the daily up here. It broke out and failed. And that's why it's had such a big move down. Excuse me, just bless me. Had a sneeze there. So in terms of your question, sure, it could retrace higher here. It is at some technical support, but really when you look at things, you still have this massive daily chart gap fill that hasn't been filled. So I would anticipate buyers are likely going to step up to the plate more so around this 59.70, 59.80 range. If you get through that, then you'll have some support really around this zone over here, 53.63. And if you get through that, you really don't want to get through that. If you get through that, you probably shouldn't be going long at this point, because you could retest the lows all the way down here at 39.83. But I do anticipate Roku to actually just trade and chop sideways here. You can get a push up, but I would personally look for this gap fill as the bigger bounce zone, in my opinion, if you're looking for a long side. Some downside is pretty much on the cards for semis. Yeah, I agree there, Sumit. I do agree with the semi downside. You know, just looking at, again, those SOXX, stellar move. You look at AVGO, super extended, reversal. Let's see Taiwan semi. Taiwan Semi still putting in potential bullish consolidation, but it needs a lot of time to work off this huge move. I mean, a low of 100 all the way up to 33 there. That's a huge move in Taiwan Semi. Let's look at Intel. Intel triggering a potential head and shoulders pattern right off of this resistance trend line. Pivot high to pivot high through here. You trigger this pattern on Intel, and this is a very bearish pattern. This one could be a very weak name that gets shorted and falls more than the average semiconductor. This is a left shoulder, this is a head, this is a right shoulder. Right shoulder has a clinical bear gap that was opened, and you're still consolidating bearishly in this gap zone. You lose this neckline, and it's a pretty big fall for Intel. That would take you right back to this earnings gap up, and that makes sense. A lot of support here, gap up, pivot, pivot. So a lot of technical support in that range, and that would be the downside measured move on INTC. So semis, again, I think if you're trading long in the semis, it's more for day trading scalps at this point off of momentum bounces. But if you're holding swing trades, I think it's prudent to take profits because you're likely going to see some sell side pressure coming into semis very shortly here. They're super, super, super extended, both on a technical and fundamental valuation. If there's any other questions, feel free to put them in the chat. I'm just going to keep scrolling through this insider selling and buying to see. I mean, there's not really much buying going on right now, which should also tell you a little something, something. We're just scrolling through here though. Dyne Therapeutics, nothing new to report there. Again, I just look for unusual amounts. So I like to compare on a percentage basis in my head. Have they sold 20% of their holdings, 40%, 50%, all of their holdings? You know, for instance, this EDR Endeavor Group, the insider, still has 81,000 shares, but sold 70,000. So that's a big chunk. You know, comparing what's left to what they sold is a big, big chunk. So let's look at Endeavor. What's that ticker? Is it EDR? Yeah, EDR. All right, so first things first, one thing I've noticed is EDR had an attempt at a breakout above this pivot. This was your wide range red bar sell-off. You had a big consolidation period, an attempt at a breakout. The breakout up here has failed. This is what's called a failed breakout. Whenever patterns fail a breakout, often they see downside. They say the biggest moves come from failed patterns. So with the insider also selling Endeavor on the 22nd, almost 40% of their shares, and we look at the chart, the 22nd, I mean, you've had some two really, really big inside days, and earnings is coming up. So maybe there's some bearish reaction is expected on earnings. You know, obviously it's a risk, doesn't, you know, guarantee any sort of price movement when insiders are buying and selling, but maybe the selling right ahead of earnings off of a failed breakout pattern is something that we can trade on the short side. I'm curious to see how this is going to react in the coming days now based off of that sell side pressure. So keep that one on watch. It is looking a little bit more bearish, and it's got that confluence of insider selling. All right, let's keep move on. XOM, seeing a little bit of selling. Really, that's minuscule. 2,400 shares sold. Still holding 30,000. Let's keep going here. Nothing crazy. I mean, there's Fubo, half the shares sold, dispersing about, you know, almost 50% of the holdings. Let's look at the Fubo chart. I imagine Fubo is also weak on the back of Roku and some other stocks. So Fubo has really a lot of the broadcasting rights around soccer. But a big, big, big breakdown from this key channel. I'm tracking this one. You are coming up into some support. I would say this level does get you about a week, you know, a week or two bounce. But the bigger levels at this gap fill, 109. But at this trend line, this little breakout trend line from this pivot high down to this pivot low, pivot low, pivot low, pivot low. If you hit this level in a straight shot, we should get a big bounce off of that zone. And you know what leads me to think, I mean, I like the fact that this is selling off into earnings. It leads me to think that this is actually going to bounce on earnings. Stocks that sell off into earnings typically have a high degree of bouncing because the expectations have been lowered. You know, they have been putting up decent results, but it's going to be interesting. It's going to be interesting. I mean, there probably is some momentum with Fubo. They have the rights around the English Premier League soccer, one of the biggest soccer leagues in the world. So I think when you look at the English Premier League right now, there's a lot of competitive nature in the league. It's not one team blowing out all of the other teams. You actually have 3 teams in their league, and they're probably their biggest client, the EPL rights. But when you look at how competitive the EPL is this year, 3 teams are competing for the championship, and that probably pushes more buyers wanting to gain a little bit of a subscription, buy a little bit of subscription into the later season, because things are so competitive across 3 different teams fighting for the championship. That's just a little bit of a fundamental analysis, since I am a big soccer fan, or a football fan if you're in Europe. But Fubo is certainly looking interesting there. Lots of sell side pressure. Let's keep going here. Any other tickers that people want me to look at, feel free to put in the chat. We're just scrolling through some of the insider buying and selling. All right, nothing unusual there. GNK maybe a little bit, 12,000 versus 42. We'll keep scrolling. Let's see. More selling. IBKR, a little bit of selling, nothing crazy in terms of the amount. Intuitive Machines, JB Hunt. I mean, a little concerning that Eric McGee, the executive vice president, has sold almost all of his shares. Sold 3,800, only holding 464. Alfred as well, an insider, sold 6,500, still holding a big amount, 62. Let's look at JBHT, because that is a household transport name that we can trade and have traded. JBH actually into this double top zone. You can see rejection was initially rejected at double top. That's a clean rejection. You're coming up for a nice heavy bounce, putting in that potential negative divergence. I would say this one likely continues lower. You do have a weekly topping tail. I think this one on the short side, factoring in with the insider selling, is probably a high chance of falling lower here. I think that this one is potentially a technical short, and the risk to reward, basically, if you were to short this here, the risk to reward, you just use this as your stop loss, this high pivot, so 219. So you really only have about $6 or $7 worth of risk. You get a daily close above that, or even a weekly close if you want to give it more time to run, and you hop out of the trade. All right, guys, I'm going to wrap up the video here soon. If there's any final comments, I'll look at the last ones here. I have about 4 or 5 that people have reached, so we're just going to quickly fly through them. Seeker on YouTube, you're looking at nat gas. I did do a video on my YouTube channel, so check out natural gas video. But I'll quickly pull up natural gas here in case there's any other viewers interested. So nat gas had that big epic move off of this measured move parallel channel. Big 2-day surge. Our members caught the Boyle and KOLD short trade, sold it. Big sell-off the following 2 days on Thursday, Friday, and now you're getting a nice gap up in this Monday market session. So it's up 5.54%. So I think that if you get a daily close back above this 187 zone, which this 187 zone, why you sold off there, you have a massive liquidity zone, a weekly gap fill that goes all the way back to July of 2020. So that's one of the reasons why we got rejected there last week. So I think that if you get a daily close above that, you're going to see a short squeeze all the way up to 225, which is about a 20-21% range on the upside of nat gas. I still remain bullish on nat gas over the medium and long term. It's just when you're in a heavy downtrend like this and you're below key support levels, you could absolutely continue going lower based off of fear and panic. But you have to take your shots somewhere. These are the strong technical levels. These are oversold conditions. These are historically extremely cheap depressed levels. Anything below $2 is typically a bargain 2 or 3 years later. So I think long term, this makes sense. Short term, if you're trading and swing trading, you could get chopped up as we move up and down. But again, I remain tactically bullish on natural gas. You're welcome, Seeker. All right, let's look at Pan American Silver, PAAS, for Wash 17. Pan American Silver is a silver mining company. You can see the clear downtrend it's been in. Massive breakdown, trading below all of the key moving averages. Getting very oversold though on the daily. You're putting in potentially a little bit of a divergence. You're wanting to move higher. I still think this makes one more low, believe it or not. I mean, you are at this long-term support trend. If we take this, you have this little bit of a trend line connecting your pivot here, pivot here, pivot here, pivot here. We broke below it, never confirmed, and they ripped it right back up. So this is actually a short-term positive. The fact that we had a big bearish breakdown on volume, never confirmed the breakdown, and got ripped right back up above that trend line, that's a bullish reversal. And look at that. You do have a weekly bottoming tail to trade again. So I think that you could trade this asset class on the long side. I really do. You'll have some pretty big resistance at this pivot zone right over there. So I think this one on a risk reward basis, picking up longs here certainly makes sense. And then just using this as your stop loss. A daily close slightly below this 12, 16 zone. So this one's looking like a solid trade. Now, obviously this moves on the back of silver. So whatever silver is doing, Pan American Silver is going to respond to. And right now, silver's looking like it wants to trend lower and break down. So I think miners, silver miners, gold miners have actually showed us that, displayed that. I think the underlying commodities have stayed a little bit more elevated compared to the mining because you've had weakness, or you've had strength in oil, increasing their input costs. But silver has triggered a head and shoulders pattern on the daily. You can see clear rejection at the neckline here and here. Downside target off of this bearish pattern takes you all the way to about 1914. Now you will have this big upsloping trend line as support. You break through that, and it's about a 60-70% chance of coming down to about 19 bucks, or the low 19s. So if silver is to trend lower, that likely means Pan American Silver, PAAS, can also trade lower. But as of now, it's showing signs of life, and you typically want to see the miners bottom before the underlying commodity. So maybe miners are bottoming here. I would personally like to see it fill this weekly gap fill around 1178. That's kind of my big buyable level. There's a massive liquidity zone here. This liquidity zone that Pan American Silver traded into is huge. This is your COVID freakout. This is a massive, massive zone where I think market makers will drive the price into. So I'm looking at a buy zone right around there, or at least to start accumulating. Seeker cold wave seems to be coming to the west side also. That's important. Weather patterns are important. All right, a couple other tickers here since we've looked at Pan American Silver. Can you look at AAL, American Airlines, and KBH? So KB Homes and American Airlines. All right, AAL. It's looking bullish. AAL appears to be putting in a sideways choppy consolidation pattern above the daily 200. That's important. Weekly chart looks very constructive. Weekly chart is an inside bull flag consolidation pattern. This breakout likely is going to take you to about 16, 17 bucks. This will be your big test for the bulls. If you can get a break of this neckline, then you have a massive inverse head and shoulders pattern forming. This left shoulder, this head, and this could be a right shoulder. You break this neckline. I think we're going to get a minimum test of this area, but you break this neckline on AAL, and I mean, it's a monster move. Now, the only concerning factor that I have with American Airlines is the backdrop of potentially oil moving higher. I have it priced in that oil is actually going to move higher here in the coming sessions. It is showing some weakness in the futures as of now and on Friday. So airlines will likely actually continue to rally tomorrow unless something crazy happens where it pushes oil back up. But if oil reaches this 84 target that I have, we're actually going to see airlines and transport stocks probably sell off a little bit more. But as of now, AAL is looking constructive. If you're long, I think just keep managing the positions. Don't let it go against you if you're already in the green. You have quite a bit of gap fills to the downside here, but this one's looking like it's poised and going to continue higher. I think the daily 200 moving average is going to continue to get bought unless some unforeseen oil increase occurs overnight. If we get another 5-6% pop, it's going to break this chart down. But as of now, inside of this green impulse candle, that is your line in the sand for the bulls. You really don't want to lose this low candle here. You get a daily close below this impulse green candle, and this pattern will look like it's about to fail. All right, we'll look at KB Homes is the final ticker, and then I am going to wrap up the stream unless there's any final comments here. Let's look at KBH. KBH, daily chart, bull flag pattern, all inside of this upper range of this green bar. You had an attempt at breaking down here. Bears tried to push it into the gap. They failed. W bottom, boom. This one wants to trend higher. This one wants to trend higher. You are at some resistance. This pivot high all the way in 2018, pivot high 2021. But it is looking like it wants to trend a bit higher. This is a weekly bull flag pattern. The only thing that could influence this tomorrow is the housing data that we get tomorrow. You have a $16 call for September, AAL. Oh, sorry, wash 17. Will that decay? Will what decay? Oh, the $16 call? The $16 call for September on AAL? You should be okay. That's probably going to hit. Oh, that's going to hit. You got plenty of time on the clock. Oh, I wouldn't worry about that decay. That's we could see $16, in the next 2 weeks. That's really only a move, currently speaking. $16 to go in the money. So we're talking about a 6.3% rally from current price. It could do that in 1 day. So I think that's okay. You're welcome, guys. I appreciate all the viewerships. We are going to try to continue to do some live streams ahead of the market opens and prep, just to try to inform members here. Hopefully a lot of this analysis has helped, a little bit of the insider buying and selling, tracking, going through some charts. We did a rundown of the QQQ, semiconductor space earlier. We've touched on natural gas and a lot of individual names, a lot of good charts that people have brought up. So I think there's been a bunch of different alpha opportunities that people have presented that we've gone through. But to sum things up, as of now, futures are opening negative, and the dollar. I think the dollar is going to be the market moving currency this week. You can see that the dollar has actually broken out of this intraday inverse head and shoulders on the 10-minute chart. You've gotten above the neckline, and now it's trying to trigger this hourly inverse head and shoulders. So you can see you have a mini one, and then you have a larger one. So this larger one, the neckline goes through these pivots, and you're trying to get above that right now. So if this gets above it this week, we're going to see the dollar charging higher. And right now, it's above 104. If it stays above 104, the indices don't like that. So keep your eyes on the dollar. I think that if we fall below 104 and trend lower, indices can rally. Tech small caps can bounce, specifically small caps. But if we start holding and closing daily closes above 104, that's where more pressure gets put on the overall economy, the emerging market, and a lot of the S&P 500 earnings could be affected. Last question, what should be target tomorrow? Sorry, Ram, could you repeat that question? What should be target tomorrow for what? What should we target tomorrow? What should we target? Again, futures are tricky. Anything that we say right now can be changed by the morning when we wake up to see how it is. But I think that if semiconductors continue to show weakness, you look at the SOXX ETF, that one closed near the lows. You look at NVDA, that's still super, super overbought. You look at the QQQ. If the QQQ triggers and gaps down tomorrow off of this head and shoulders pattern intraday, you have a downside target all the way to about 431. So even 432 puts could be played, 433 puts if you're a little bit more risk averse. But and then once you're into this gap window, you really have this gap fill at 427 and this gap fill. So once you're into gap window, gaps like to be filled, and bears will try to press it and press it and press it. I think there's always a chance of an early, if we gap down tomorrow, I think there's always a chance of a quick little bounce trade as people pile in. But I'm just watching this neckline. you kind of actually have two necklines to watch. This is actually the official neckline. You got to watch this trend line here. You gap below it tomorrow, it becomes resistance. As long as you trend above it, you could actually push to the high of the channel. So watch this little neckline pivot. You know, a break below 436 is a short, but a holding above 436 I think is a long. So that's kind of the QQQ expectations. In terms of individual stocks, you know, on the long side, I like staple stocks, likes of Clorox, CLX, still trying to curl here. You've had that earnings gap uphold with a lot of selling taking place, lighter volume selling, and now you're starting to potentially curl up and show a little bit of a basing formation to push higher off of that earnings. I also like PG, Procter Gamble. This one is showing signs of a huge technical breakout, a massive, massive multi-year consolidation range, and we've broken out to the high side. So I think this one, I think with the strength in nat gas being up over 5%, look for buy the dip opportunities in AR. This one's going to catch a bid with nat gas being up over 5%. Look for continuation strength in EQT. That's another one. Oil right now slightly negative, so oil stocks might be under pressure. On that note, I'm going to end the stream here, guys. Thank you all for tuning in. Please give this video a like, share it, do whatever you can to support the stream. And again, thank you all for tuning in. And hopefully everybody's taken away some positive price action and learning experience. Take care, everybody. Enjoy the rest of the night. We'll see you on the stream.